In today's video, we're talking all about taxes, and it is that time of the year. We are in the month of January, and can you already believe it? February is right around the corner, and a lot of people that are trying to get finance for a mortgage may be curious if you're self-employed specifically, what should be your best strategy to get started. So every year, Stephen, we have this conversation, and a lot of people are reaching out and saying, hey, I want to buy a home this year. Should I reach out to my CPA? Should I reach out to my mortgage company? Oh, and by the way, I'm self-employed. So, what are you seeing right now? Are you getting those phone calls too?
Yeah, absolutely. W-2s are right around the corner. I've already got some emails, 1098s and things like that. And now's the time to plan. So, first of all, we are not CPAs. So, we work hand in hand with CPAs and financial investors and things like that help you out there, navigate your personal world. So just wanted to make that clear. So the strategy is, are you going to buy a house this year? And especially if you're self-employed, we want to look at the numbers, right? In the mortgage world, W-2 income is very easy to calculate. It's cut and dry. And in self-employed, there's lots of different tax strategies. So your CPA will have a strategy that makes sense for you and your specific business. And we want to make sure that that strategy aligns for a mortgage approval. So first and foremost, starting with the lender is important because we can take a snapshot of where you were at last year on your taxes, break that down, and then see if there's anything that you need to bring to your CPA to make sure that if you're going to owe taxes, what does that number look like? Has your business increased or decreased with the current economy? So there's a lot of moving pieces, but right now is the time to kind of dial in and take a deep dive, just looking at the mortgage to see, do you need to have any different type of tax strategies with your CPA?
Yeah, and along those lines, this question comes up a good bit. Like last week, I had a client call me and said, hey, I want to get a mortgage this year, buy a home and all of that good stuff, but I've been self-employed. And my question was, well, how long have you been self-employed for? And typically, we need to show 2 years of self-employment. This guy was self-employed, been 16 months. Is this guy dead in the water?
Absolutely not. And mortgage guidelines are always changing. And, sometimes old rules are what people hear, but there's always new loan products coming out. And I'm self-employed, so I feel like the self-employed customer sometimes gets the short end of the stick in the mortgage world. So the cool thing is that that's been identified. There are loans where we can actually remove the the tax returns for a self-employed person and go off bank statements and just show the deposits. Because again, CPAs will advise on different strategies for the business to, claim revenue and things of that nature. But when it comes down to it, if you're not paying taxes on it, then the mortgage world doesn't allow you to use it as qualifying income. So there are loan products where we can go off 1 year tax return for self-employed. 2 is the average, but there's also alternative loan products that allow self-employed people to take a different path that a W-2 person would not.
Yeah, now something else that comes up and just came to mind, like a lot of people will say, well, I make $200,000 a year, but then when you actually get the tax returns, there's those things called expenses, right?
And write-offs, yes.
And write-offs.
The customer is never lying. They do have gross revenue of $200,000. Using a CPA and a tax strategy, they may only be claiming $20,000. So big difference. That's how business operate. But, the average business owner, they pay their CPA to take care of them. So when we get the tax returns, we do see that big number. But in order to stay in business, maybe they're not claiming all of that. So those are things that we want to identify and then make sure that there's clarity when they go to their CPA to say, hey, we may have to take a different strategy this year. But it's all based on how much money do you want to invest into this house? What's your payment goals and how much can you afford? And then just like any type of business meeting, get educated, do your due diligence, and then take that information to the professional who is going to service you so that you can make sure that everything is in the line.
Yeah. And along with that question, having these early conversations with borrowers about their tax situation for, in this example, 2026. If somebody And I know there's like a time frame, right? So like we're in January right now, but if somebody wants to purchase that home in March, they have to file their 2026 taxes before closing, right? Or no?
So we don't have to do anything until the deadlines hit. So in theory, right now we would underwrite off the 2025 return and or the 2024 return if an average was necessary. So you can choose to early file to get ahead of that. And that might be part of the strategy that allows you to get approved this year. The IRS would have to receive and record those tax returns to where we could pull a transcript. That's the checks and balances to make sure that the document that is prepared and turned into us is also the same document that's turned into the IRS. So getting ahead may be part of the strategy that you beat the line and you get your information into your CPA before everybody else so that you can be the first, to get those returns not only prepared, but to the IRS and recorded.
Yeah, and then would you also need a current year profit and loss statement if the taxes hadn't been filed yet?
So, in my world, their income and employment get wrapped into the same sentence, but they're actually two different things. So we mainly use the profit and loss statement just to show that the business is still active. And then we cross that with like a Secretary of State just to make sure that there's, activity in the business. But we really don't use the profit and loss as far as like underwriting the income. It's more of a way to verify that someone who is self-employed is still actively in that business.
Okay, gotcha. That makes sense. Well, guys, if you are self-employed and you have specific questions for Stephen about your loan situation, all his contact information is right there on the screen, and there is a link in the description below. If you need my help in your home search or my team's help in your home search, you can get a hold of me right there. And of course, a link is in the description below. Stephen, you are the master of knowledge when it comes to mortgages. Appreciate you clarifying all of that today for our viewers. Any final thoughts around the self-employed? Go ahead.
Yeah, absolutely. Being self-employed myself for 20 plus years, I definitely feel like I, bring extra information and expertise and actually application as to how to marry this all up, right? Because you don't want to rob Peter to pay Paul, but there's rules, there's guidelines, and there's things we all have to be aware of. But right now is a good time to put a plan together. So would love the chance just to plan with anybody who is self-employed and looking to get approved for a mortgage in 2026.
All right, guys, thanks for tuning in today. Hopefully this video was super helpful for you. If you're getting any value out of the videos we're producing, make sure you hit that like button and subscribe to the channel. And we will catch you guys in the next one. Take care.